Welcome to 2 Cents, where we help dentists navigate all the noise. I'm Matt.
I'm Victoria.
And I'm Rabih.
3 questions we are going to answer today. Number 1, what drove returns in 2023? How could everyone have been so wrong? And then number 3, the great pop star Britney Spears once said, "My loneliness is killing me." Is yours.
Love it. Hey. Dramatic pauses for the win.
I'm working on it. Okay, first of all,
good.
We'd be remiss if we did not mention Christmas. We are talking day after Christmas. Yes, we are still working last week of the year. You cannot stop us from working. Sorry. But let's talk about highlights from Christmas. Rabih.
I made a Yule log for the first time. I've been talking about making a Yule log for like a week, and it was a success. It was delicious, and it was a small sense of accomplishment, mini victory for the season. I loved it.
That's awesome. Victoria.
That's amazing. Well, first, I've never had a Yule log, you guys, and I really
They're
want
amazing, and they're really cool.
They look cool. I saw everybody post them on their Instagram, and I'm jealous. I need to get my hands on one. Highlight of Christmas. I tried a sous vide steak, and I don't know what the past tense of that is, but I'm making it sous vide. It was the best steak I have ever had in my life. It was so buttery, melt in your mouth. And the best part is I didn't have to cook at all or get involved in the kitchen this time. And I grew up being that person. And now my sister's kind of taking on that role. And I very much don't mind.
You love it.
I love it. It's great.
Food tastes better when you don't cook it. I feel like, is that a thing? Right.
It's fair. Yeah.
Sure.
Okay. So both of your highlights were food related. Food was great for me, but not my highlight. I think highlight for me is just watching my kids come out, see the presents from Santa Claus, their eyes light up, watching them open the gifts. It's so much fun. This is the first year my kids are both old enough to know what's going on. It's very, very fun. So
Cute.
Christmas was awesome. So let's move forward. This is the last 2 cents of 2023. So
Woo.
Happy, sad? I don't know. Number 1, what drove returns in 2023? Rabih, hit us with that market and Fed economy update.
Sure. So we've all been waiting for the last Fed meeting where they're going to be issue their summary of economic projections. And the market has been doing really well since the Fed meeting. And here's why. Every quarter, the Fed issues their projections on what the real GDP growth is going to be for next year, what the unemployment rate is going to be, what their inflation expectations will be, and where they think their interest rate policy will be at. And there were a lot of changes since their September meeting. So in September, they were expecting that the GDP in 2023 will be growing at 2.1%. Now in December, they're forecasting that the GDP for this year we just been through is actually at 2.6. That's 0.5% in GDP growth. That's significant in how it affects the wealth of households. For next year, they are expecting the real GDP to be around 1.4%, only a slight change since September, which is still positive. It means that the Fed is still pushing forward their soft landing narrative. Unemployment rate didn't really change, 3.8 for this year, 4.1 for next year. However, their inflation, core PCE inflation, is for next year is lower from 2.6 to 2.4. So the Fed is now expecting that interest rates are, the inflation, is going to disappear faster than they expected. And for them to maintain their soft landing, goal in mind, they have to support that with lower interest rates for next year. So in September, they were projecting that interest rates in 2024 are going to be 5.1%. However, in this December meeting, they were change of plans. I think interest rates are going to be in 2024 are going to be 4.6%, which means that's 3 interest rate cuts that they just gave the market for free. And the market loved it. It cemented, their anticipation that the Fed is going to cut interest rates. And actually, if you look at the 10-year treasuries, they are now below the 4% level where they were 4.9, almost 5 a month ago. So the market already priced in 1% cuts. And this is, in line, in tandem with the equity market Christmas rally that we are seeing. So it was very important, this Fed meeting, because it kind of cemented that, the fight against inflation from the Fed's perspective is over. We are not raising interest rates anymore. And if we want to keep the economy in a position where we do not tip it into a recession, throughout the year, we're going to be cutting interest rates back to a normal territory away from this restrictive territory, which, as you guys are seeing in market prices, provides a good sentiment that, next year is going to be great. Interest rates are going to be cut down. However, when it comes to the conversation of sentiment, I take myself back to the beginning of 2023 and what sentiment we had about the economy. The Fed was hiking interest rates at the fastest pace it's ever done. And we're like, this is going to crash the market. At the beginning of the year, we got a couple of banks, like Silicon Valley Bank and stuff, fail. And we thought this is what's going to trigger similar to an 08 scenario. So sentiment changes, but it actually has an effect on the market. And I don't have it in the document on purpose, but I collected what the year-to-date performance of a major asset classes are, and I want to quiz them on you to see where the return was driven in 2023.
Yes,
so here's what we have. We have the US stock market. We have the developed equity markets. We've got emerging equity markets. We have the globally diversified portfolio that contains all of these three. We also have gold. We have intermediate treasuries. We have 3-month T-bills. And we have long-term treasuries, 20-year interest rates. So out of all of these, which ones do you think had the best performance out of them all?
Okay, yeah. Rabih, you just listed like 10.
Yeah, and I was like, I think they are too little. I tried to limit myself. I'm sorry.
U.S. equities did the best.
Yeah.
U.S. equities, ballpark for what return we're in?
22%.
Okay, Victoria?
Sure, let's go.
Let's go. Actually, it's right. U.S. equities measured by like the Russell 3000 index, as of today, they're up 25.88%. Big year. Big year. Whom do you think comes in second place?
Ooh, I don't remember all the things you listed.
I was just going to say, I can't remember, like...
U.S. developed, international, gold, real estate, treasuries, or a globally diversified portfolio.
Globally diversified. Portfolio.
Oh, there's a reason you guys are financial advisors, So globally diversified portfolio came in at 22% year to date, which is great. Now, instead of like listing what's in between, whom do you think was the worst for the year?
Gold.
I can't remember the other ones you said.
Gold, real estate, emerging markets, U.S. aggregate, 20-year bonds, and 3-month treasury bills.
Oh, 3-month treasury bills.
I was just going to T-bills. Oh, now you're going to change your answer, Matt.
Sorry, I forgot to.
T-bills were the second from bottom at around 4.87%, which matches what the Federal Reserve interest rate policy is, right? However, throughout this period, we had interest rates go up all the way to like 5% back in October.
So long-duration bonds.
Exactly. So long duration bonds did worse, but only at 2.43%. And these numbers are total return. They are assuming in, the coupon that you did. So just the price of 20-year bonds fell, I would say, around 3%. And then you got 5% of coupon coming in. So that's why long-term treasuries are at around 2%. And it's interesting because the beginning of the year with where asset classes were standing and the risks we were calculating, I guess everyone in the industry got it wrong. The safest thing was to be in those high yield saving accounts, in those short-term treasuries where you are locking in a guaranteed 5% if you're not taking any credit risk, up to like an 8% if you're taking any credit risk. And it's like 8% guaranteed. This is great. But whoever did that, and good for them, many people, us included, some of our clients, some of us personally, had more money in our high yield saving accounts than we should have, right? Missed out on the 25% the market has given you, simply because at the beginning of the year, the sentiment was trending in a certain direction. I will
talk about which
exactly in the client huddle later on, but I just wanted to give you guys a little teaser.
I love that.
Oh, we're all about the teasers.
We love the teasers. Okay, Rabih, is that I love the guessing game. I feel pretty good. I felt like we were pretty close, Victoria.
Yeah, I need to start asking people who would get them wrong so I get pleasure out of it. You guys are too good.
You guys, I have such bad testing anxiety. Like, I tell all my clients, like, I won't do math in front of them. Like, I have like an old man calculator that I will like bring out because I get so much anxiety, like being on the spot like that. So thanks, Rabih. That was
you
so
said
nice
that. And Victoria's like, what, a test? What are we doing? I didn't prepare.
It'll be
I
like
didn't study.
I didn't study. It could be on something I like am really good at, and I'm just gone out of my mind. Wait, Rabih,
okay.
so are we going to see lower high yield savings accounts interest rates there next year?
should.
If
Right?
the Federal Reserve next year decides to cut interest rates, yes, the banks would want to preserve their margins and they would be offering lower yield on their high yield saving accounts.
Well, it was nice while it lasted.
Yes, it was nice.
It doesn't mean you can't lock it in by going longer duration now, given that the upside risk to interest rate kind of went away.
Yeah.
Okay, number 2. So that was what drove returns in 2023. Number 2, how could everyone have been so wrong? So I dug up a couple of, there was several, but there was a couple of big ones of these analysts who were predicting what was going on with the market for 2023. Again, we could do a whole podcast just on this. But in October of 2022, Bloomberg Economics said there was a 100% probability of a recession happening within 12 months. First of all, how ridiculous is that you put 100% probability of something happening? That just shows their research department. Like, the fact that you put that out there is just ridiculous. The next month, The Economist published a piece. So this was November of 2022, published a piece of why a global recession is inevitable in 2023. And then several firms again. So the Mortgage Bankers Association outlook for 2023 said we are expecting a recession in the first half of 2023. So those are just some examples of the sentiment you're talking about, Rabih. Across the board, pretty much everyone calling for a recession in 2023. Spoiler alert, it did not happen. In fact, the opposite happened. I think this kind of sums up I found a quote from Richard, I'm going to butcher this, but Richard DeChazal. He's a macro analyst at William Blair. That's terrible. But here he kind of sums this up, I think, as far as these predictions. So he goes through kind of piece by piece, and he said 2023 can basically be highlighted by what didn't happen more than what happened. And so he gives a few things here. So I'll just go through these. He says there was no recession. Energy prices did not shoot to the moon. We did not have another deadly pandemic. The collapse of several regional banks, including the 16th largest bank in the country, Rabih, you just mentioned this, did not result in a financial market meltdown. There was no government shutdown, and the debt ceiling standoff ended with a whimper, not a bang. China, to date, has managed to keep the ball rolling as it continues massive debt leveraging. The current conflict in Ukraine and Gaza have so far not turned into a wider regional conflict or World War III. I think that kind of sums up there was many more, but those are kind of the big ones. The people calling for reasons why we were going to have like a global recession and we just didn't. So I'll throw it to you guys. I've got some thoughts on this, but how did we get this so wrong? Any thoughts from you guys? I shouldn't say we didn't predict this. The analysts, the quote unquote experts.
How did everybody else get this wrong? But
how did everyone get this wrong but us? You know?
It's so weird.
Yeah.
Victoria?
Rabih, or Victoria. Yes, either one.
Oh,
any just general thoughts?
Rabih first, and then I'll go.
Okay, I'll go first. Given that this was the most anticipated recession ever in the history of us tracking and trying to predict recessions that didn't happen, re-emphasizes the idea that we think about dynamic systems as if they are stable. Like, if in a stable system, the probabilities are always the same. But in a dynamic system, the fact that other people think something is going to happen changes the probabilities to start with. It's the simple, quote that you can't step in the same river twice, or once you experience something, you're not the same person again. So once everyone is anticipating a recession, the usual probabilities that predict whether a recession is going to happen or not are thrown out of the window. The system is dynamically changing, and you can't really beat that system. You just need to learn how to do risk management in that system. And I think that's why, and I don't think we'll ever get it right, whether it's us or with the super intelligent AI helping us, the system, including us, is always changing.
Love that. I've got some numbers to back that up, Rabih. So, but really quick, Victoria, any thoughts from you on this?
I mean, my mind went immediately to what we talk about, or I guess what I talk about and rant a lot about, is that media just really likes to sell like very loud, very strong opinions, and even from places that are supposed to be like really reputable and people that are like big prominent people in the space. The truth is that like headlines like that really sell, and they know this about their readers and their listeners, and so of course they are incentivized to make it like really dramatic. And so studies show that like over time people have become more and more mistrusting of media, and so it's kind of, I think, sometimes for reasons like this where they're like, oh, you said all of these crazy things, like 100% guarantee that we're gonna have a recession, like what? And then it doesn't happen, and then people are like, oh, why, what was that all about? So that's just kind of where my mind went, is like, oh, thanks media, that was really nice of you.
Yeah. Well, and here's the thing. To that point, Victoria, I actually think Bloomberg and media sources can do this because they know nobody's actually going to question them because of the nature of media today. We're so bombarded by media headlines and the 24-hour news cycle. We're actually not going to question it because we're on to the next thing. So they can say whatever they want.
Totally. And I think that's why it's so important to have a long-term, big picture view of your finances, because then individual years won't matter. If you stick to it, you invest regularly, you have a long-term view, individual blips like this are not going to matter at all. Then you don't have to get stressed out by headlines and freak out that like a recession is coming, because it, like, in the grand scheme of things, it's not going to matter at all. So I guess that's my takeaway, is just don't get all hung up on the headlines, because they know what they're doing, and like companies like this are very talented at it for a reason.
Yeah. Love this. You both we didn't even plan for this because I put it on the doc, but I don't think we obviously hadn't reviewed this. You guys are already jumping ahead, which is great, to the things that I'd written in the doc. It just means that, great minds think alike, obviously. But I wanted to give some more context. I wanted to give some more context to this, that it's not just this year. It's not just market predictions that are so wrong. There's kind of a common saying to I'm not going to give it direct, just kind of to give kind of an idea of a famous quote kind of in the financial space. It's no one predicts anything because they know, they predict because they're asked. So like that's what happens with these forecasters. They don't know. They think it's their job, or people are asking them. We actually get this sometimes as advisors. When I tell someone I'm an advisor, they'll immediately go to, oh, what do you think's going to happen in the market? They're like, what's going on with the market? What do you think's going to happen? And I'm like, I have no idea. Why would I know that? But because you ask me, I feel somewhat pressure, like I should know. So I totally get that. But to give you a little bit more context on this, from the International Monetary Fund, there was a study done. They took a sample of 63 industrial and developed countries, right? So 63 countries. They did. It showed that private sector forecasters were only able to predict 2 of the 60 recessions in these 63 countries that occurred over the sample period. And I don't know what that sample period was, but it was over an extended period of time. There was 60 recessions that they were tracking within 63 industrial and developed countries, and they were only able to predict 2. Just shows how quality, these forecasters are. And then Professor Philip Tedlock, he spent years researching the accuracy of forecasts, specifically in the political realm, so not just in the economy. He took 28,000 predictions from 284 experts. He found that the average expert's forecast were only slightly, like a rounding error number, better than just random guessing.
Wow.
So basically just saying that in all kind of realms, political, financial, in any market, we suck at forecasting. We just aren't good at it. And I think there's 2 main reasons. You guys have already kind of touched on both of them. Number one, these are humans that are predicting this, and humans we fall victim to biases, things like overconfidence, confirmation bias, herd mentality, recency bias. study buddy Victoria did we hit a topic where decision fatigue can kick in, like the environment of these individual humans. And then number 2, Rabih, you just mentioned it. The system is so complex. I don't think we even understand how complex and dynamic these systems are we're trying to predict. And it's impossible. It literally is impossible to predict with any level of accuracy. And so I guess the main takeaway here I want to highlight, Victoria, you already mentioned this, of kind of some tips, maybe some things to arm yourself with next time you see a forecast, you read a media headline, you hear a friend talking at a party, whatever. There's a couple things I would say, and you guys add anything else you'd add to this. But number 1, question the source. So you hear a prediction, who is it coming from? Again, media, is it a salesperson? Is it a friend trying to impress you? Question the source. Number 2, Victoria, you kind of mentioned this, like ask yourself, am I playing the same game as this person? Mm-hmm. So a media outlet predicting something in the market in 2024, they're not playing the same game as you. They're not trying to help you with your long-term investment strategy. And then number 3, I would say try to put a barrier between you and your emotional reactions in some way, a system, a person, some way for you not be able to hit the sell button or the buy button, maybe based on market predictions. Anything else you guys would add to that before we jump to our third question?
No, that was a great recap.
Speechless. Wow. Okay, guys.
Totally speechless.
If I had the power, I'd click on that crowd clapping, cheering for you.
Or we can do it.
I love that. There you go. Golf clap. Okay, let's go to number 3, third and final question of 2023. We are going to answer. I'm going to repeat this. The great pop star Britney Spears once said, "My loneliness is killing me is yours." Victoria, study buddy, hit us with this.
Let's go. Well, so I just wanted to do kind of a fun one, but I guess this is kind of a sadder topic. But I know I usually do like some research paper, but I just wanted to do something a little different to end the year.
Are you going to close us out on a sad note?
I didn't mean to. Is that me kind of projecting onto this?
We'll make it positive. We'll flip it. We'll make it positive.
I can always put a positive spin to it. That's just, that's me. Well, okay. Part of the reason why I brought this topic up of loneliness in America is, New Year's resolutions are coming up and all of that. And I'm just trying to envision like what's important to me, and social time is something that I'm trying to integrate more of in a way that works for me. So, I heard of a study about loneliness a little while ago, and so I decided to bring some stats to the group here. So,
are you going to sing it for us real quick though first?
Yeah, actually, I have a whole outfit. Do you mind if we wait? And
yeah, go ahead.
Okay.
I was expecting a song to start the segment off.
I'm going to need a raise before I sing some Britney on here, if that's okay with you.
Okay, yeah, sorry. Continue.
We'll hit that in my performance review.
Okay, perfect.
Started singing on the podcast.
Good save, Victoria. Good save.
There you go.
Yeah, well, anyways, let's bring some stats into this because that's what I do here, right? Study buddy. Here she goes. Okay, so did you guys know that like half of U.S. adults are experiencing loneliness, and some of the group that is experiencing it the most is actually young adults? That I thought was kind of strange, but half of us are lonely, you guys, and I didn't think it was that big. And so next,
like, which is actually ironic because we've never been more connected, like via social media, and it seems like we've never been more lonely.
Yeah, no, and I'll talk about how technology has influenced that, but some of the effects of loneliness I thought were just insane. So if you're lacking social connection, it actually increases your risk for premature death as much as 15 cigarettes a day does. Like, isn't that it's like smoking 15 cigarettes a day if you are experiencing loneliness.
Wow.
Yeah, and it
That's
also
wild.
Increases your risk of heart disease by 29% and your 32% increased chance of experiencing a stroke. And sorry, I'm going to keep going here. This is bad.
Wow,
huh?
Seriously.
Maybe this wasn't the study to do.
I'm working on a spin here somehow.
We'll spin it. We're good at this. And then lastly, it's also associated with increased risk for anxiety, depression, and this one I thought was interesting, dementia. Like, you are more likely to have dementia.
Lose your mind.
Like, literally lose your mind if you don't spend time with your friends. Like, these are all like like such bad negative side effects of like not spending time with like friends and family.
Dang. That
I can
is
think of a Philip Morris commercial. Be healthy. Smack back with your friends.
Yeah. Oh my gosh. Seriously. Yeah.
Yeah, it's wild. But to your point earlier, Matt, technology, and this might be like a correlation, not causation. I get it, but you're right. Like as we have become more socially connected, more and more people have felt more isolated. I think this says here a study. In a US based study, participants who reported using social media for more than 2 hours a day had about double the odds of reporting increased perceptions of social isolation compared to those who use social media for 30 minutes or for less than 30 minutes per day.
Wow.
Wild, right? So increased social media usage can make us feel more isolated, and also the fact that like we've just become more polarized in our country has also led to that.
I also think it like I've heard this concept before this, and I don't know where this came from, but this idea of like surface level happiness versus deep happiness. I think
Mm-hmm.
the same could be said for connection. Like there's surface level connection and then there's deep connection, right?
Yeah.
And so I'm thinking about this. It's like we've never been more connected on the surface
Mm-hmm.
than ever before with technology. I know what's going on with my friends who live in Florida or California or whatever, but so the surface level, but deep level connection is so lacking with those same
Yeah.
people because they're
Yeah.
busy. And again, it's almost like the surface level connection almost like replaces the deep level, right? Because it's like, oh, I'm
Mm-hmm.
connected to you. I know what's going on in your life. So I don't feel the urgency to like deeply connect with you anymore. I think that's part of this is
Yeah.
we're again surfacely connected, but the deepness of our friendships and relationships is probably going. I'm only speaking anecdotally. I don't have data to back this up, but it seems kind of intuitive to me on that in that respect. Robbie's got
Yeah.
thoughts.
Yeah. Let's hear what Rabih has to say.
No, I kind of agree with you, and I'm trying to like stretch my mind to think like if our human behavior is changing that way, how will like our life look like in the next 50 years? Where the perspective I have is because growing up in Lebanon, it's a very communal society. Here, it's all about individualism, and I love it. I'm
Yeah.
all for it. But in Lebanon, it's all about like the sense of community, being part of the society, and you're kind of forced to interact with other people. Where here you aren't, and
Yeah.
it's like the realization. Because when I first came here, it's like I'm so glad I'm out of that bubble. Like that was what I saw. But now, after Victoria's conversation, it's like this is a double-edged sword. Like the only way is to find a middle because you'll die either way. One of social pressure or one from being lonely. Like
It's so true.
Yeah, you have a good point. I feel like we're kind of working towards a world that like you can do things on your own and be more isolated. So I feel like I bring this up to say like this is important for everybody to integrate in their life. Like as if you're a New Year's resolution person, a goals person for next year, social interaction should absolutely be part of it. Like give yourself permission and actually create space in your calendar for that because our calendars get booked out, I mean, like so far in advance, and it could be like a month before I see a close friend of mine, and that's like that's not okay for my well-being. So I think it's important to just be like intentional about it, know that it is good for your mental, physical, overall well-being to like make that a priority. Like hanging out with your friends and your family is so crucial to your overall health. So maybe consider that as part of your New Year's resolution.
And it's
Because
hard,
otherwise you're
right?
going to die prematurely, right?
Or you're gonna die
Or you're going
early.
to die early.
No, it's hard, right? Having friends as an adult is hard.
Oh, it's so hard.
It is. You get busy with life, especially once you have kids and you've got your career. And to Robbie's point, the individualistic hustle culture of America about
Yeah.
success and moving to the next thing, that it can take over, and you can lose sight of this kind of stuff, the social aspect. And to your point, Victoria, I think the seriousness of it, we're not thinking about the long-term consequences we're creating. And like this is almost a silent killer, right? It's like
Yeah.
you're not thinking about it. And before you know it, you're years down the road, you've been promoted at work and you're doing well. Or for a dentist, in the dentist context, you've built up a 4-location, 5-location DSO, but you got no friends and you never see your family. So it's like,
Yeah,
at what cost, right? It's Rabih, I think you said it perfectly, is finding that balance.
totally.
I actually heard an interesting podcast. A guy was talking about living in Brazil. He's from America, but he lived in Brazil for several years and kind of goes back and forth. And he says the same thing, Rabih. He was talking about how Brazil is so like the culture of Brazil is like so harmonious and slow, and it's not hustle. It's just kind of like hanging with your people, right? And he says, but nothing gets done there.
Yeah.
Right. So that's
Yeah.
the cost. But it's almost like finding a balance between a culture like that, or it sounds like maybe a culture like Lebanon and a culture like America, finding some middle ground for your own personal life. Victoria, I love this call to action. Like, invest in relationships in 2024. Make that part of your plan.
Yeah, because I feel like a lot of people, when they set goals, it's usually, I feel like, the same three. It's like a career goal, a fitness goal, and a nutrition one. Like, they're kind of like the same, like like popular ones. And so I thought this was like, like, what about investing in your relationships you have? Like, I don't know. I just wanted to bring like a different idea to the table, and also back this with the fact that like you're way more likely to die early if you don't do this. So it is like, it's very, very important. So consider making it part of your New Year's resolution.
Well, and that's what's interesting, right? Is it's not even mental health here we're talking about. This is actually physical health we're talking
Physical.
about.
Yeah,
Like,
absolutely.
by doing this, you're investing in physical health.
Yeah, and the study goes deeper to show that like if you got your sense of community, like you're actually way more likely to recover from diseases or handle them better. Like part of the study was like on diabetes patients, and people who had a strong sense of belonging and community actually did a lot better than those who didn't. So there are
Dang.
physical benefits to this. Absolutely.
Yeah, that's interesting. And so, okay, so the positive spin is invest in relationships and friends and loved ones, and you'll live a long, prosperous life. Is that it?
No, yeah. Why'd you say that?
Is
with
that positive? I don't know. Just
doubt?
making sure.
Yeah,
Sounds
I
good
agree.
to
It's
me.
just consider making it part of your New Year's resolution, or allow yourself to like make space for that in your calendar.
Yeah, there's one other aspect to this. Sorry, really quick. In the context of like planning for retirement or planning out finances, right? That we talk to dentists all the time. This should also be part of your planning process. Meaning, if you're a dentist who's nearing or trying to plan for retirement, even if you're 5-10 years out, this is a very underrated part of that planning process.
Yeah.
For most people, your work is going to be the source of your purpose. It's the source of your social connections day to day.
Mhm.
Like, there's a lot of aspects of your life. Most people are thinking financial planning when it comes to retirement or shifts in your life. This is a huge part of it. If you're planning out retirement, where are you going to get that purpose, and where are you going to get those social connections? That takes planning. You've got to be thinking about that.
Yeah. Like, who are you going to lean on for your community? Where are you going to get your sense of belonging?
Yep.
Yeah.
Exactly right.
It's so important.
Okay. I love that. Rabih, Victoria, any final thoughts?
Happy New Year.
Happy New Year.
Enjoy the last few
New
days
Year.
of 2023.
Happy New Year. Yes. Thank you so much for being here. Thank you so much for listening. That is our 2 cents. There is only one thing left to do. That is go forth and live your rich life. Thanks, everybody.